Welcome to this week's live video. Today I'm going to focus on what's happening in the Chinese economy. The news today is China reported October credit growth, and it was a big disappointment, reflecting both weak uh, household and weak business confidence. Aggregate financing, a broad measure of credit, grew 815 billion yuan in October, according to Bloomberg estimates. That was well below the 1.2 trillion yuan as expected by surveyed economists. Banks made $219 billion of new loans, also less than expected. So why the weak credit growth? First of all, uncertainty about the U.S.-China trade truce and whether it will continue to hold. A lack of faith in the still very much struggling property sector. In September, new home prices fell at their fastest rate in 11 months. That means people are not taking out mortgages. Youth unemployment hovering around 20%, and involution, which is causing young Chinese to embrace frugality, as the BBC recently put it. The government's 500 billion yuan new financing policy tool, announced in September, still hasn't done much to spur growth and investment. And subsidies for consumer loans that were also rolled out in September haven't done much to lift household demand either. So, also an interesting but alarming trend, a rise in the number of so-called phantom loans. This is banks pushing out extremely short-term loans to companies that don't need them and maybe don't even want them. So how it works is a bank asks or tells a business to take a loan and then has them pay it back on a very, very short-term horizon, typically within 1 month with no interest charged. Presto, the bank now has met or is one loan closer to meeting the quota that is set by Beijing for lending. Bloomberg is reporting that this practice, which is known as quick lend and recover, is spreading as banks come under unprecedented pressure from the central government to lend more to businesses and to consumers. That's it for this week. Tune in at the same time next Thursday. Thanks.